Ever pondered over the best choice for diversification? Mutual funds or ETFs? It's a question that nags at the minds of many, from the novice investor dipping their toes in the financial waters for the first time, to the seasoned financial enthusiast looking to optimize their portfolio. So, what's the answer? Well, as with many things in life and finance, it's not as simple as one being inherently better than the other. It all depends on your individual circumstances, financial goals, and risk tolerance. Now let us dive into the world of mutual funds first. These are investment vehicles managed by professional money managers who allocate the fund's assets and attempt to produce capital gains or income for the fund's investors. It's a bit like having a personal financial advisor who makes investment decisions on your behalf based on the fund's specific objectives. This does make mutual funds an attractive option for those who prefer a hands-off approach to their investments. Mutual funds also offer the advantage of automatic diversification. When you buy a share in a mutual fund, you're essentially buying a piece of a large portfolio of assets. This could include hundreds or even thousands of different stocks or bonds, which means your risk is spread across a wide variety of investments. On the other hand, there are ETFs, short for exchange-traded funds. These are similar to mutual funds in that they represent a collection of assets. However, unlike mutual funds, ETFs are traded on an exchange, just like individual stocks. This means you can buy and sell them throughout the trading day at fluctuating prices, offering more flexibility for those who like to play a more active role in managing their investments. ETFs also offer diversification, as they typically track specific indexes. This means when you buy an ETF, you're buying a piece of the entire index it represents. For instance, if the ETF tracks the S&P 500, you're essentially investing in all 500 companies included in that index. Talk about spreading your risk. Now, while both mutual funds and ETFs offer diversification, one is not necessarily better than the other. The choice between the two often boils down to personal preference and financial goals. If you prefer a hands-off approach to investing and don't mind paying a bit more for professional management, mutual funds may be the way to go. On the other hand, if you enjoy the thrill of the trading day and prefer a more active role in your investments, ETFs offer that flexibility. In conclusion, whether it's mutual funds or ETFs, both offer a viable path to diversification. It's all about understanding your financial goals, risk tolerance, and personal preferences. So, ponder over it, do your research, and make an informed decision. Remember, in the world of investing, knowledge is power.